Investors and traders, welcome to the channel. Today is 13th of October 2024. Hope everyone is having a fantastic weekend wherever you are. And in this video, we'll be taking a look at the key US markets. We will be taking a look at the US dollar. We'll cover some of the major currency pairs, such as the Euro USD and the GBP USD and the Yen versus the US dollar. Then the bond markets, really key to watch the bond markets, the price action which took place last week. It's a really important one to take a look at, so we'll cover that in a little bit more depth. And then we will be taking a look at the gold market as well briefly, and also the silver market. And then we'll take a deep dive into the US stock market, stock indices. And as always, this video is for educational purposes only, and it is not a financial advice. So what we are looking at is our timing model. This model has actually done a really good job of calling key turns in the market. And if you recall, especially for the newer subscribers, we had a recent date come in last Monday, 7th of October. Now this is a minor timing which came in, and the significance of this is that we had basically, if you look at this, the market was just range bound. We had a down day today. It was actually down quite a bit on this day. The market was down roughly about 1% on the Dow Jones cash market, but it also marked the low for this trading range, and we have had a move higher. Now 14th of October, which is next Monday, we have another minor timing coming in. So just keep that in mind. But the key date we have coming up is the 7th of November. This is also the day when the Federal Reserve, I believe, comes out perhaps a day before with their interest rate decision, and it's also very close to the election in the United States. So with the timing, this is key one. We have to give it 2 to 3 trading days on either side of it, but this is the key one that we should keep a note of. And then if we just take a look at what is happening on slightly longer term timings, this is still a work in progress, but I just wanted to quickly show you that I have also got an 18th of November 2024 coming up as a important day to watch. And then we move actually into 2025, and that we have 31st of March 2025. And this is really longer term because we are now moving into monthly charts, and still work in progress as I just move through some really longer term cycles. We have 3rd of March coming up on the monthly chart. And then we have the 2nd of September. So I believe this period between March and September, and with the monthly charts, you have to give it a month here and there. I believe this period will be really interesting, and I don't know exactly what sort of turn we are likely to get. But I think between the March, or starting from April perhaps, and September October time 2025 is gonna be a pretty significant time period in the markets. Now let's start by taking a look at the US dollar first. This is the daily chart of US dollar, and here we have seen a really strong move in the US dollar right from here after it met our targets, which were right here at this bottom. I'll show that to you on the weekly chart one more time. So really strong move, and what the move has done is it has retraced 38.2% of the 107 highs. So if we go back right here, this top formation right here, it has retraced exactly the 38.2% retracement. And then last Thursday we had a trading range market, quite a lot of move to the upside, then to the downside, and indecision. And then we had an inside bar last Friday. So here the market is just consolidating, and the chances are it will actually likely to do that for a few more days. And then eventually, if it is able to take out the lows of 10th of October, that's gonna be a signal, and then ultimately moving below the lows of 8th of October is perhaps gonna give us the signal that we might have seen this market topping around here, so US dollar putting in a top around 38.2% retracement, and we are likely to move back towards at least towards the lower end of the range. And then moving on to the weekly chart, here we go. So this was our target right in this box, and the market took a while, but it just went in here. I'm gonna remove this pattern right for now, this one, the purple one. Here we go. And here what we are looking at is look, we have this support coming also from this ladle line. Really important key for us is this 99 level, 99 to 98. If the market closes below that, US dollar is gonna really move lower really quickly, and we could see assets such as gold price up, move up quite high quickly as well, and of course some other currencies as well, but that's fiat. So gold is actually most likely to be the beneficiary out of it. And where the market is right now, or where it found its support, right, is also from this long-term 200-week moving average. This is this faint gray line here in the background. This is where the support has come in, and we have seen a fantastic run higher as well. So it's really at a key moment where this market is, whether it's gonna smash through to the upside from the 38.2% retracement. In that case, it's gonna go and actually test the upper part of the this trading range, or it's gonna find the resistance and we begin to see a move back towards the lower end of the range one more time. So we are keeping a close eye on the US dollar, and on the flip side of it, if we take a look at, let's start with the Australian dollar, because this one is pretty interesting. From a volume perspective, I believe this one is fourth or the fifth largest currency pair, but it has quite a lot of significance with regards to the gold, because there are quite a few gold miners in Australia, of course. And here, what is really interesting is where this market has actually pulled back into. So if we just draw a retracement like this, it's right at the 38.2% of this key low of 5th of August right here. And what the market has done is, you can see that for 1, 2, 3 days is holding above. So it's got a chance, it's got a pretty good chance that this market could actually find support from here. So which means a weaker US dollar, and it could the really shorter term move right into this 38.2% retracement. So pretty good risk to reward in terms of what could be achieved right to 38.2% retracement in the Australian dollar. So another interesting one to keep on watching if you are interested in trading currencies, for example. And then if we move to the euro versus the US dollar, so this is kind of an inverse image to the dollar index. This is the one we normally take a look at. So there we go. And here what we can see is this market also had a pretty strong move lower. And in fact, in this entire move higher from April of 2024, the largest decline that we had seen was this much, and it has exceeded that. And also, if we draw a channel formation or a trend line joining this low and this low, it has also slightly broken below that, and it has retraced 50% of this entire move starting from 12th of April 2024. So pretty strong kind of a move that we have seen in the strength in the US dollar, and of course weakness coming into the euro currency. Now what is possible is that the market has been just going on for a number of days. It could possibly be oversold, but what we are really looking at is that 38.2% in the dollar index, that retracement, 50% coming in from euro from this level, and then it's right between the 1.618 expansion of this swing as well. So it's in a zone where we have possible support here. So I would expect with the further price confirmation, if the market begins to get stronger and is able to take out the highs of 10th of October to the upside, we could see a move at least, which is going to be around the 38.2% retracement. So going in this region, let me actually try to draw a line right here. 110 to 110.20 roughly, so that's around 38.2% retracement, and after that we'll have to wait and see if what sort of price action we get. If the market is pretty strong, the move is strong, and then it could actually indicate we might have seen a pretty good bottom in here, and then we can then have further ABCDs, which means that this gap around here would become our target, and possibly market being strong could actually take this gap out to the upside, so essentially making new highs since July of 2023. Now let's take a look at the GBP, so the cable. Here we go. Okay, I think I've chosen the wrong supplier of price. This is the one we have been watching. Now this one is also, look, it's just been coming down. Now one of the things I would like to mention for the British pound is that this level from where it found a resistance, 134 roughly speaking, 134, 130, 40, 130, 134.40, it's a very strong resistance level, and the reason is because we have a number of things actually in that region. We have the 1.272 expansion of this entire swing. So that's the swing high of 13th of July 2023 to the lows of 4th of October 2023. Then we have this ABCD, which is a CD leg extended by 1.618. Let me double, sorry, 1.272 times the AB leg in that region. We have this red ABCD coming around here as well, and then we have the smaller 1.618 expansion of this swing high to this swing low as well. So when we have a confluence of two or more ratios or patterns coming together, it's a region we pay very, very close attention to, and so this is why we have seen a really sharp move in the British pound to the downside, and the chances are that this move is actually likely to continue. And here, this is the weekly chart, so I think this comment needs to well, in sort of a way it's still valid, because the bearish symmetry is this one that we were talking about, and what we have seen is actually price get in this region but not too far above it. So the chances are, the kind of resistance level that we are talking about, this is the key low here, and then of course this candle right here. The market could actually move quite a bit lower here, and let's see where we have the 38.2% retracement of this entire move from here on the weekly. There you go. So my mistake actually, I do apologize, I didn't see that actually, because we have the 38.2% retracement right here of this low. This low is actually likely to be a good support level as well, and what it means is we could potentially have a double bottom formation around here, and we have the 20-week moving average just below that. So yeah, let's just keep on watching the British pound, because if we begin to get a stronger weekly close, taking out the highs of last week's candle, then that's actually going to add to this, that we might have seen a pretty good bottom in the market coming in right from the 38.2% retracement. It's good that I actually saw this. Now getting below this one on a closing basis, then it's likely to pull back at least towards the middle of this. If you look at this as an entire trading range, perhaps towards 126, 120, 127, 126 level. This is where we're going to see this market pull back into, which is going to be probably about 50% of these lows of 2nd of October 2023. But right here, right now, I think it's it's really interesting where it is, and it is likely a good support level. And this is why what we are seeing here, right here as well, is a potential double bottom as well. So I missed this 38.2% retracement. It's good that I was able to see that. So that's good. And now let's take a look at the Japanese yen. This is the second most traded by volume index in the currency markets, in the forex markets, which are about, I don't know, $7 or $8 trillion traded on every single day. So really huge markets. So here, ever since this pattern formation, we have seen a really strong move to the upside, and it's right at this 38.2% retracement, which means that if until and unless this breaks above 149, 150 in a convincing closing basis, the chances are we are actually moving back into the trading range, might even retrace 50% of this entire range, which bottom around 16th of September to the highs that we saw of 10th of October. So this is what we are looking at. We have this ABCD completing right here. Just above that, we have the 38.2% retracement. We have a confluence of two things, resistance from structure. So a number of things coming together. So the chances are we might actually see further resistance play out. Now, if it just breaks out of it to the upside, then we know that the US dollar is getting really strong. But here, right now, just looking at how it dropped from the 11th of July, the chances are we might actually see a move back into the range, and we could see, some sort of this sort of region being tested in this gray box. So this is what we're looking at in the Japanese yen. Now let's move to the gold market. Oh no, actually, let's take a look at the bond markets, because the bond markets are really interesting to watch. With that, we start with the 2-year Treasury note, and in this, here we go. So the 2-year Treasury note, it has actually been playing out with these patterns really well. Long-term subscribers will know that. So not going to go into the details of the patterns, but what we were watching for was this 38.2% retracement. And the Thursday, it actually went right pretty much to the tick to this, around 4.1%. And then we have seen no follow through. Not much of a follow through last Friday. We just saw a really narrow range trading range that we saw. But with this kind of price action coming from the left hand side, you can see the structure here as well, and then we have this structure around here as well. The chances are we are most likely moving back into this range. We could see easily the yields actually moving lower, perhaps towards this 38.2% retracements, around 3.87%. And now if it begins to retrace like this and then it makes it move higher, that's going to be actually a bullish move. But right now, because of what we have seen with the lower yields, the trend kind of favors to the downside, but we do have to respect this structural support coming in from this region, and we have seen a pretty move to the upside. Now, really interesting is what really happened in the 10-year. This is the 10-year note, and after completing this ABCD, this one, and this is where I believe around the 17th is when 18th when the Fed came out and they made an announcement about the interest rate cuts, 50 basis points. One would expect the market would actually move higher, but I believe that was already baked into the price here, and it actually moved lower. And what it has done is it has actually retraced 50% of this entire it has retraced, like it's not drawn properly. Get rid of this one. Several of these. Okay, so it's right between the 38.2% and 50% of this CD leg. But if we just take a look at this entire move right here, then what it has done is it has retraced 50%. 38.2% of it. So I'm just gonna remove some of this, also make this more clean to actually take a look at by actually getting rid of some of these lines here. There we go. Here we go from here, and that's gonna be a 38.2% retracement. So I'm actually gonna write it 0.382. Let me actually make it smaller, so maybe 24, make it red. Okay, there we go. So that's a really important level to watch, which is around 111 and 25 seconds, and we have seen the market respect that on the 10th of October last Thursday, and we did not see a follow through right out of it, but we saw an inside bar. So there is pressure on the yields, but it seems to be abating a little bit, at least on the shorter end of the curve, which was our 2-year, and then of course on the 10-year as well. But the most interesting one is this ZB, so which is the 30-year bond futures, and here this is the pattern that we were watching for. Now, to be very honest, it had done a pattern around here, 122, and I thought, because that was an ABCD, it might be a pretty good support, but it just broke below that. So this actually is showing that the curve is steepening. So if there was an inversion in the curve, that is de-inverting, and that's actually a good sign as well. However, I'm not going to go into the details of it. I've done a video about this, that how the curve de-inverts before a recession. So it's kind of moving along or chugging along that playbook. So it's where it is, right? This pattern is really key. I think last Friday we saw the market reach really critical levels, and there's a good chance that we might actually be very close to a good bottom in the market. If not, we already saw pretty much a bottom in these longer 30-year bond futures. Just doing a retracement. Here we go. There we go. So it's also a 38.2% retracement of this entire rally here. And there you go. I'm also going to write it just the way I did it for the 10-year note. And one of the things that we have actually, I've mentioned it several times, that when the bottoms are made, the bottoms are made in unison. Tops are formed, different times, different markets doing different things. But bottoms, when they are formed, and I mean really good bottoms, then they are formed in unison. We have the 10-year treasury note hitting 38.2% retracement of its entire move higher, or say ABCD pattern. 30-year long bond futures, they have not completed their ABCD. The ABCD comes around 131 and 132 roughly, we can say. But on the downside, they have actually completed their 38.2% retracement. And also we have this ABCD pattern here as well, where CD leg is 1.618 times of the AB leg. So this is an interesting one, and of course we can draw this trend line here as well. It has got some overlap with it, but we have some trend line support as well, and I believe that this is actually a little bit easier to see here on the TLT. This trend line, I think this is the one that I was joining, but it needs to be redrawn with this low here, and there we go. So we have this nice looking trend line here as well. So very similar kind of pattern drawn in a different way compared to the 2-year treasury note. But we have a number of things coming together for TLT as well. So let me actually make it a thicker line. And here we go. There we go. With a dotted, I like this one. Okay, there we go. So this is what we are watching. Really nice trend line support coming up. We have a nice pattern, and looks like the bonds are putting in some sort of a bottom or very close to it, which means that what the move in yields that we have seen, they are likely to start to decline. Now let's begin to take a look at the gold market. Here we go. So the gold market has been strong last Friday and Thursday. So when I did a video last Thursday, I had actually mentioned this level around here, 61.8% retracement. Can't remember exactly on which, maybe I did it on the 2-hour chart. Here we go. And the market has actually rallied from this 61.8% retracement right into it. So if it breaks above this, and the chances are it is likely to, because if we think the US dollar is actually weakening, then I think the gold is going to be a big beneficiary. So gold is beginning to look strong again. One of the things about gold was that we have this big massive pattern at 127 level come in. Look, it's just broke above the trend line. It's still part of a trading range, because this whole thing is it retraced, and then now it's just moving back towards the top of the range. But the good thing to see is that after several days of decline, especially big moves on last Tuesday, the market has actually taken the high out of last Tuesday. So for the bulls, that's a pretty good sign. And on the weekly chart, we can see that this market just went trading range for the last couple of weeks. And here is this big pattern that we have been watching. And of course, this is a really long-term monthly chart where we have several of ABCDs completing at 1,2700, nearly 2,700. Now, of course, the month has not completed yet, but we'll have to wait and see if the market is really strong the way it is. It just breaks above this. That's going to be very, very bullish for the gold, in my opinion. And then, of course, the next psychological level comes around the 3,000 level. But this would indicate that some of these ABCDs, these cycles, they are getting extended. And then once they get extended, they are getting extended by 1.272 times of AB. Or 1.618 times of AB. So really important to watch gold where it is. I am a little bit conservative on gold at these levels because of the cycles around here. But the gold is actually looking pretty strong. So that's really interesting. Now, if we were to compare it with what is happening with the Bitcoin, and here we go. So the gold is way stronger in 2024 than the Bitcoin is. And one of the fundamental reasons, I think, is because in 2024, the banks, and I mean the central banks as well, the banks have been allowed as part of Basel III that they can have gold as an asset on their balance sheet, so they can actually lend against it. So the banks, there have been really big commercial entities which have been buying gold relentlessly, other than the fact that central banks have been buying, such as the Chinese have been buying gold a lot. So the Bitcoin, it remains range bound. Right from the 78.6% retracement, it just found a lot of resistance around here. It has moved back, and let's see what sort of if we get an ABCD on the Bitcoin. Here we go. It looks like there is a little bit of downside possibly, but then if it were to do that, I think it's going to form a pretty bullish pattern formation. So let's take a look at this one. So right, 61.8% retracement right here, or of these lows. Because if it does that, assuming this is the top, then it will also be forming a 3 drives to a top pattern right here. So I am just going to draw this, because just eyeballing, to me it looks like this was 1.272. Let me just quickly draw this just to be a little bit so let me actually do this. And if I do this, yeah, it missed it by a little bit, so I'm going to cancel this for now. But it will have a pattern which is going to look like, assuming this is some sort of a top here, a 3 drives to a bottom pattern, and then we'll have a pattern looking like this. I have to give it a different color so that we don't mix it. Here we go, and here we go. around here, and that's going to be a a pretty bullish looking pattern formation if it were to happen like this. But if we just look at this one, it is a trading range because we have all these highs which are actually lower. So it's just moving or it's just probing these areas, but these are lower highs. And if you look at the bottoms, then here we have slightly higher bottoms around here. So it's just in a trading range, and I personally believe that we are not really going to see a massive kind of a if on the bullish side, a bull run starting till March of 2025. Because of the Lucas timing cycle. So it might just remain choppy like this for quite some time. And the key is that this roughly about 50,000 level is really, really important for the Bitcoin market. Okay, so let's take a very quick look at silver, and then we'll move on to the stock indices. Here we go. So the silver, is, you can see that it's not as strong as the gold market, and it's been range bound, but it completed our ABCD pattern here with a chance of maybe it's able to get above to 33.87, possibly around 35. So we're just waiting to see that whether this one is actually able to do this. I'm going to get rid of these retracements and also this one. I think it's the chances are it's going to remain more of range bound, and it also depends a lot upon what the US dollar is going to do. The US dollar weakens, then I think the it's going to have an impact on the silver. And then of course our targets are anywhere between 33.85 to 35 spot 30 for the silver futures. Now these are COMEX futures. This is not the spot market. If you happen to be watching the spot market, the levels, the actual price levels are slightly different, but the patterns are very, very similar. Okay, now let's move on to the US stock indices. Here we go. This is the daily chart of the S&P 500 cash market. And here the market has moved into this box that we had drawn. It made a new all-time high last Friday. That is great stuff. As you know that we have higher patterns coming from this ABCD formation around 6100 roughly. So there's not much upside left in terms of getting to that level. It's about roughly 300 points thereabouts left. And what I'm not really sure of is whether the market will be able to get there before the election or after the elections. And of course, we know we have a key date coming in as well around 7th of October, 7th of November. But the market has been following the playbook and these patterns quite well, and it's just moved into this region. So we'll be watching the 58.15 level really carefully, with the chance that the market has upside as well. So this is what we are looking at in terms of the daily charts. And then if we move to the weekly chart, here we go. I'm going to try and squeeze this a little bit here, and it looks a little bit messy, so let me actually extend it like this. So I just wanted to show you that we have on the weekly chart this big ABCD in black, which completes around 6100, and the market on the weekly, you can see it was a pretty good week. And we have the ABCD in this blue also completing around here, where the CD leg is 1.618 times the AB leg. And then we have the smaller, this black one around here, which is also completing around 6100. So that's our target, but that's also a very strong resistance level as well. And we could anticipate some sort of return coming to the market if the market gets there, when the market gets there. So this is what we are watching on the weekly chart. And what I'm not really sure of is whether we get there before the elections or after the elections. So this is something we'll have to watch. Now, what happens if, let's say, what we are thinking does come actually reality, that we see some sort of a top coming in the market around these levels. So let's play a game of some sort of assuming that perhaps 6110 is some sort of a top in the market, right? So what could happen is that if we look at this is the market symmetry concept. So if we just take a look at what happened in the year 2022, so we take the bear market of 2022 and we just take the symmetry of it, and we actually assume for right now that 6110 is the some sort of a top because of these pattern formations. So that's the high, and if there's going to be a retracement, what could happen? So we take this market symmetry and then we go back to all the way to 2020, and that's where we have this whole cycle beginning, which is this big ABCD, and then we bring up our 38.2% retracement. For now, I'm just going to get rid of the 61.8%, and what we can see is we get a level of around 4620, 4650, 4620. So we have some structural support possible around 4800, and then 38.2%, 4620. So the market could possibly actually retrace about 40% roughly, which is 38.2% retracement. 38.2% retracement, and what it will do is it will be actually falling right into this trend line as well. So anywhere between 4800 roughly to 4620 is going to be our target if the market actually finds or confirms some sort of a top around 6110. Now the market can do anything, and what we are doing is actually using our projections based on the pattern recognition. So we'll be actually watching the daily charts really carefully when the market gets there to these levels, and try to ascertain whether what we think might be happening might actually be happening. And thus far the patterns have done a pretty good job of actually keeping us on the right side. So I believe if I'm able to recognize those patterns correctly, then we'll be able to actually make a really good call as well. But for now, 6110 is the kind of S&P 500 target on the cash market. Now I'm gonna go into the details into the futures market. We'll have a really quick look on the S&P 500 weekly futures, and here you go. So 6170 is roughly where the ABCD completes. It's very similar to the patterns are very similar to what we have on the cash market. Where things are different is this is the NASDAQ 100. This is the weekly chart, and here the big difference is that the NASDAQ, it had been actually leading since the putting in a low on October 2022, and it completed this big ABCD and just gone nowhere. It's gone into a trading range, but it's been doing pretty good. I'll just show that to you on the daily chart as well. So there is a chance maybe the NASDAQ also makes a run or tries to go for another all-time high, or of the 8th of July 2024, and we can see that on there we go. This is the daily chart of S&P 500. And here what we can see is, there we go, this 78.6% retracement is still capping it from here. It's just in this trading range, but we have this ABCD completing, which could actually see this market go and test these highs there. So that remains a possibility. But what we are not seeing is basically sharp declines, the kind of declines of -2 standard deviations that we saw here. We haven't seen those in a while, and that I believe will be a really key to actually understand that the structure of the market might be changing when we begin to see really sharp declines. We have seen one sharp down day here, but the market is slowly but surely creeping higher. But we haven't seen really big negative days, just the way we happen to have a -3 standard deviation day on the 6th of September, and we had our key timing coming in around 3rd of September as well. And you know what, that marked the bottom of it, because the -3 standard deviation is such a rare event to happen. Now I am just going to quickly run through this because the video is getting really long. So let's take a very quick look at the Dow Jones futures. This is the E-mini futures of Dow Jones, and a really interesting thing is we were watching for this ABCD in purple to complete, and the market is likely to get into this box. So it will also be completing on the daily chart this ABCD pattern. On the weekly chart, here we go. This market has slightly higher possibilities, as high as 4,700. So if the S&P 500 makes a move towards 6,100, this is what the Dow Jones is likely to do, move into this box, or at least 44,000. And then if we take a look at the Russell 2000 futures, they did something really interesting. I'll show that to you on the daily chart, but on the weekly chart you can see that it's just stuck in a trading range, and I believe when the yields begin to move lower, which we are anticipating, that should actually help the Russell 2000. And on the daily chart, what the Russell did is, there we go, it also completed this ABCD pattern, and now what I think is that we are moving towards this 2325 level around here, which is the 1.618 expansion, basically into this gray box that I've drawn here. Looks to be the target for the Russell 2000. And if we were to draw some sort of a trend line like this, you can see that the market just broke above that. Perhaps it could move Monday, because we have some minor timing coming in. It could pull back to around maybe 222.25, and then most likely it's gonna make a move to the upside. Now IWM, because I also like to watch the cash market for this index, and what it did was, this is what we spoke about last Thursday as well. When I did the video, it had already completed this ABCD and it's likely to go for the completion of this pattern that we are looking at around 227. So this is what we are watching in the markets. So I've covered a number of markets. We looked at the US dollar, some of the major currencies, the bond markets, really key things which are happening in the bond markets. I think we are very close to a low in the long bond futures, the 10-year treasury note, and also 2-year treasury note yields are falling, more likely to fall. So we have probably seen a low or a high in the yields, or we are very close to it if we have not already seen it last week. And then the gold market, and then we covered the US stock indices. So I do apologize, the video is getting really long, so I'm going to cut it right here, and then probably sometime in next week I'll do another video, and then we walk through the sectors. So stay tuned for that, and there will be more videos coming out for the technology stocks early next week. I don't think I'll be able to do that today. So thank you very much for watching the video. Good luck, good trading, and if you happen to find this video of educational value, you think you learned something, then please give it a thumbs up. And if you like the way we look at the markets, how we do the technical analysis here using pattern recognition, and then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted, and you will not miss anything. And I will speak to you guys soon. Take care of yourself, and good luck and good trading.